The skies aren't clear just yet. Let's look at implications and lessons learned about the airline and broader travel industry by discussing recent developments surrounding United Airlines. It experienced a major disruption in its operations on Wednesday due to a critical tech glitch that grounded flights across its U.S. network for several hours. The issue was tied to the airline's Unimatic system, which stores and relays essential flight data, and affected operations at key hubs including Newark, Denver, Chicago, and Houston. Although the airline claimed to have resolved the problem, the delays rippled through the day, impacting over 1,000 flights by late evening, according to FlightAware. The FAA confirmed that the outage was isolated to United's internal systems and not related to broader air traffic control infrastructure. U.S. Transportation Secretary Sean Duffy also reassured passengers on social media that the issue was specific to United's operations. United acknowledged the lingering delays and classified the issue as a controllable delay, meaning it would cover customer expenses, such as hotel stays where necessary. The tech glitch highlights the increasing dependence of airlines on complicated digital networks and the growing threat of IT interruptions. This incident follows a similar tech mishap at Alaska Airlines earlier this year, which grounded flights due to weight and balance system errors. As airlines invest heavily in renovating their systems to facilitate seamless operations, these events underscore the importance of robust and reliable technology infrastructure. The FAA offered full support to help address United's flight backlog, and the airline's team worked to restore normal operations. But what the FAA can't help with is United Airlines flight attendants rejecting an earlier tentative agreement for a new contract, with 71% of voters saying no to the deal. The contract, reached in May, would have given flight attendants an estimated 40% financial gain in the first year. However, the Association of Flight Attendants CWA, representing 28,000 United flight attendants, said the agreement didn't go far enough to address the attendants' demands, including double-digit pay increases, better compensation for ground time, and improved work rules. The union will now survey its members to identify key issues and return to negotiations with United Airlines. This development may lead to further tensions between the airline and its employees, potentially impacting operations. The flight attendants have not received a pay raise since 2020 and are seeking significant improvements to their compensation and working conditions. On a brighter note, United Airlines and JetBlue Airways cleared a regulatory review for their planned partnership, dubbed Blue Sky. This partnership will allow travelers to book flights on both carriers' websites and interchangeably earn and use points in their frequent flyer programs. JetBlue will also provide United with access to slots at New York's JFK International Airport. The partnership is expected to contribute $50 million more in incremental operating profit than initially planned. It will likely be helped by the U.S. travel industry showing signs of recovery, with budget-conscious Americans starting to book travel again after a pause earlier this year. Companies like United Airlines, Southwest Airlines, Hilton Worldwide, and Wyndham Hotels are seeing an uptick in bookings and expecting stronger fourth-quarter revenue growth. Despite lingering uncertainty over the economy, airline and hotel operators are cautiously optimistic about the future.